right, welcome back. We got an early morning stock market update for you. Let me turn off this light. So hope everyone's doing well. The S&P 500, 5% away from all-time highs. NASDAQ, we're getting there as well. Pretty incredible move that we've seen here this year. A lot of record-setting years. So I hope some people were able to participate in that. If you owned any tech stock, boom, you're a winner. So let's go over the bear case. We won't talk too much about the bull case because that's more long term. The bear case are the things in the short term we got to work through so we could see all-time highs in the market, and things are getting better. So number one and number two, inflation. We had the CPI numbers come out this week, and those came in really well. You can see energy here, big down, 16, 26, 36% down on energy. So that's really good stuff there. Shelter did go up a little bit, but inflation definitely looks like it's cooling off. We also had the PPI numbers, which they came in really well, but if you zoom out here, they're still relatively high, and I would say that's the case with inflation as a whole. It is going down in the short term, but from 2 years ago, everything is still super expensive. Food, shelter, energy is not so much, but I mean, gas isn't cheaper than it was a handful of years ago. So the Fed is looking at the data and it looks good, but for the average Joe, things are still expensive and they're never going to get cheap. So that's just the way our system works. You're always going to have inflation. The costs of Super Bowl tickets are always going up. They're never coming back down. But it is getting better. It's not continuing to just increase at the rate it was. It's just kind of stagnating, which is good because the Fed is going to likely not raise rates too much more. Maybe one, maybe two more just to keep their credibility. But I think they're tapped out. I think they're done. And that's kind of like the Goldilocks scenario. That's the soft landing because we're seeing jobs stay really hot. So hopefully that can continue as well. So those two things are really, really good for the market. So those are in the green. I mark those green because those are getting much better, and I don't I don't see those turning around necessarily anytime soon. So number three here, banks with the credit crunch. I'm keeping this red as well as commercial real estate because these are not necessarily getting worse, but they're not getting better anytime soon. I think these are going to be sticky issues, and so we're going to have to keep an eye on those. Let's see, number five here, we've got narrow breadth. That is neutral. We are starting to see some things broaden out in the market. But it could be a little bit more broad-based. You're still seeing the 7 stocks kind of really chug the market along, but it is starting to spread out to other sectors. So we need to continue to see that work. And then also in number 5, we have rich valuations, which is still a thing. There's still a handful of stocks that are very rich. It's not that they're bad companies, but they just seem to be priced to perfection. So I know I've talked about NVIDIA. NVIDIA is trading at 30 times sales, meaning if you had a lemonade stand that would collect $10,000 in revenue for the whole year, the market is pricing that lemonade stand as if you could sell it for $300,000, right? 10,000 times 30, 30 times sales is 300,000. So that's the price that you're paying for NVIDIA on a much larger scale. NVIDIA's market cap is $1.2 trillion. Great company. Price is pretty unbelievable. Doesn't mean it's going to fall. Doesn't mean it needs to fall. It can keep going. It can go to $2 trillion. But it is rich. So, in my opinion, I would be avoiding those rich valuations and looking for things that are needing to be part of this market broadening, right? So, avoid the crowded trades. Easy way to say it. Yield curve inversion, still a thing. When I looked at this yesterday, we were actually starting to come out of the inversion. Um, if you don't know what the yield curve is, I got a video on it. Check it out. Big thing to understand. But as we talked about, it's once we get out of the inversion, once we climb back up and cross this black line, that's when the recession is coming close. I think it's within 6 months or something, typically, is when that recession hits. So, waiting to see the inversion continue to uninvert, and then we'll be on recession watch when we get there. But it does look like even if we have a recession, it's going to be a more milder one as of now. Anything can happen in the meantime to make it look better or worse. But as of now, the data is showing we look pretty resilient. We look really strong. And it's going to take some change to change that opinion. Number 7 here. This is a new one. And this is not necessarily my opinion, but this is what the bears would say, right? Earnings haven't bottomed. Now, I have no idea. But you know what's coming up this week? Boom. Earnings. We got Tesla, Netflix, Taiwan Semi, some big companies here. So we'll have to see how those earnings are doing. With inflation going down, that also means that companies can charge, they have less pricing power. So they're going to be charging less for some of their goods and services, meaning less revenue, meaning less profit. So we'll see if that's a thing. Tesla's cut prices on their cars. So if they sold a car and it was 50,000, now they're selling them for 40,000. They got to sell more cars to make up for that $10,000 difference price cut. So we'll see if they can do that. We'll see if other companies can do the same thing. So that's the bear case. Let's keep an eye out. But again, market is in a very clear uptrend. We are moving up. The simple moving averages are sloping up. They're not sloping down. These are great things. Now, does the economy justify blasting through all-time highs and just chugging along? I don't know. Things seem pretty good when you go around. People are traveling, people are out, people are moving. So we'll just have to wait and see how earnings do, see how companies do. Opportunities to look out for. This is the same as last time we talked. I still think these are good opportunities and actionable things to do. Healthcare, REITs. On the REITs, you need to know what you own because you need to be careful when it comes to some real estate stuff here with the commercial office buildings. You don't want to touch those, but is some quality REITs out there. Bonds are giving you a nice yield, 5%. And then buyable dips for tech. You need a dip first to buy it. So see what that is. See when the dips come. But I do think we are in an uptrend. And when we're in an uptrend, you buy the dips. So also avoid the FOMO. Avoid the FOMO. Be patient. Avoid the crowded trades. If you want to get in on the crowded trade, wait for some people to exit for a dip. And then, leg yourself into the trade. You don't have to go all in at once. Small caps, looking for small caps to make a move. When it comes to small caps, you can follow the IWM, Russell 2000 Index. Again, the thesis here is that we've got a lot more catch up to do to get to where the S&P 500 is, right? So if you were to layer these two charts on top, the Russell would be somewhere in here, and the thesis is we've got a catch-up trade to get up to where the SPY is. Will that happen? I'm not sure. I would say I spent some time looking at all the Russell 2000 stocks. There's a lot of crap in there. There's a lot of junk. So it could happen. I would prefer to find those small cap companies that you like. That takes a lot, finding a needle in a haystack. But you could play the IWM. But I do think there could be a move in small caps as the market broadens out. So, like I said, we got earnings starting back up. Tesla's next week. That'll be important to see what they have to say. I will have an update for you guys then. But I think other than that, some things that I'm buying. long-term holds, Enphase, PayPal, healthcare, XLV, IBB is biotech, Vici, and O, those are REITs. So I'll make a separate video on those. There's a lot of stuff going on in crypto. I've also been buying my big three here: Bitcoin, ETH, and Polygon. I'm not going to talk about any of those in this video. Just want to give you guys a market update, my thoughts. Things look good. I hope everyone's doing good. I'm not a financial advisor. Do your own research. Cheers, everybody.